It's not only a true honor because I think Solana is one of the most exciting ecosystems in the space, but also because our history kind of is interlinking. I still remember back in 2018 in San Francisco when we shared a beer and kind of talked about our investment in you, and remember you showing us your old office. I think you were 7 people at the time. You had a bike on the wall. It was kind of messy and many people working around. And now Solana is, I looked it up yesterday again, it's 18 billion in market cap and 1.8 billion in daily transaction volume. And you have the second largest developer community after Ethereum with, I think it's, correct me if I'm wrong, it's 2,200 developers approximately. And Solana for sure was the most successful investment in our first fund. And the reason for investing back then was the promise of scalability in comparison to other platforms like Ethereum. The vision which you were able to convey back then was incredible. You said, and I looked it back up, blockchain rebuilt for scale. And at that point in time, we didn't really know if this was going to work or not. And in preparation for today, I actually went back to my notes from our due diligence back then. And it's quite astonishing. The questions we asked ourselves were the same we are asking today when we invest in other founders. And you back then as well, you were an entrepreneur before. You were a co-founder of Sano and an entrepreneur in residence at Rock Health. And you also understood the investor side of it because you were working for General Catalyst as well. And a great company, of course, is built with a team. So you found an experienced and incredible co-founder with Anatoly, having built distributed systems for Dropbox and for Qualcomm. And what was quite interesting for us and compelling at that time was that the team you were actually bringing from Qualcomm to Solana and you were building, they were working on similar problems you were trying to solve back then. And you saw blockchains differently as operating systems, similarly as the mobile devices as Qualcomm. So the systems, I remember Anatoly stating that were deployed, I think, around 500 million devices. So at that stage, it was the team, your vision, and the ability to execute. And for us, Solana offered the best solution to scale at that point in time, to scale to thousands, if not millions, kind of devices. And I want to tap in also into your this experience building Solana, which has been so successful today. So the solution you were, let's go back a bit. So the solution you were promising in 2018 was a different approach. What was the problem you were trying to solve then, and why did you believe Solana was worth building?
Yeah. So if you think back to 2018, Ethereum had just proven itself as a general purpose smart contract platform that was useful for really, one or two things. The main one was token launches. There was the ICO boom that happened. But what caught our attention was CryptoKitties, because it was the first consumer use of Ethereum that it seemed like people were having fun doing. And if you know what CryptoKitties are, they're like digital pet NFTs, which sounds like a silly toy, but Anatoly's told me so many stories at Qualcomm when he was working in the Brew operating system, and they saw the first App Store developer-made application, and it was a bowling app, and that was the first one that hit 1 million users. And that was a big, milestone moment. And very shortly after that was the App Store from Apple, and the rest is history. So when we saw this first toy application on Ethereum that hit, tens of thousands of users, and it completely ground the network to a halt, fees spiked to tens of dollars per transaction, which the Ethereum community and Vitalik, its founder, had said before that any fees over $5 are effectively a shutdown of the network. That is not an acceptable level of transaction cost. Really, I can't take any credit at all. It was really Anatoly who looked at that constraint and said, I've built distributed systems and wireless networks my whole life, and I know that the first rule is, that you need a source of time across the network that you can make strong assumptions about if you're going to optimize the performance of the network. And at the time, Ethereum was starting to rapidly develop and publicize its path to scale, which was largely based around sharding, which is partitioning the network into many networks that are all interoperable with one another, and that's how you scale. And again, Anatoly talked about the textbooks that go all the way back to the 70s on distributed systems that say that sharding should be the very last optimization technique you use in a distributed system, not the first, because it just creates an incredible amount of complexity. It splits up the liquidity of the network. It creates communication overhead. And these are the problems we see now, 6-7 years later, still haven't been solved on Ethereum or any other sharded network. So our approach was, let's build that source of time, which in Solana is called proof of history. And we asked ourselves, should we build a layer 2 on Ethereum? Should we bring this to the Ethereum Foundation? Should we talk about scaling Ethereum because it has so much momentum? But we kept coming back to the answer that we can move much faster if we just build this from scratch. And it's what we want to do. It's what we, see a lot more potential for. And so, let's take a crack at that and let's do it. And, our approach was not centered around having a white paper that got popular first, or having, a long testnet phase that was permissioned. Our goal was to get this to be an actual global permissionless distributed network with, hundreds or thousands of validators that are globally distributed, and prove that the performance could be 1,000 to 10,000 times what you were seeing on Ethereum, even on a public decentralized network. Because what we were seeing was there was a huge wave of competitors that were getting, tens of millions, hundreds of millions of dollars of funding. There was Definity, Polkadot, Algorand, Thunder token, all these, just probably $1 billion we could point to off the top of our head in our competitors. And they were all taking a slow, academic approach to designing, building, and launching their networks. And they were all claiming the same performance. They were all saying, at the end of the day, when we finally get to mainnet, it'll be 100,000 TPS, transactions per second. So what we said to ourselves is let's not try and make the best claim. Let's try and prove the best performance with an actual working product as fast as we can. And that's what we did. So, you and I talked in 2018, and we really didn't focus on anything else other than building the team and sprinting as fast as we could. And we launched in 2020, which was just in time for, the next phase of the DeFi ecosystem building and growing. And then the bull market of 2021 and 2022. And so, I think we're still very focused on performance. Our intention for Solana is for it to always be the most performant, cheapest, lowest latency, highest throughput, single shard blockchain. And now, I'm happy to say, I think with a couple of market cycles behind us, we can confidently say that, we have the third highest mind share in crypto. Bitcoin, is the original, and of course takes the first slot. Ethereum was the first smart contract platform. And most people know Ethereum. And now I think Solana has really carved out not just the tech advantage, but also the community and brand and public perception advantage of being known as the high throughput scalable chain of choice for builders and for users.
Yeah, thanks for that. You already mentioned it here and there, but the true difference between a platform like Solana and Ethereum is scalability, as you mentioned. But maybe you can tap into this a little more. And when the DeFi market kind of came on in 2020, why was this so important to build scalability from scratch? And how did you kind of succeed?
Yeah. So in 2019, what we saw in DeFi summer on Ethereum was that users, there were at least tens of thousands of users that were custodying their own assets with self-custody wallets with their own key pairs, and they were moving their assets in between many different permissionless protocols on Ethereum very fluidly, almost daily. And those protocols on Ethereum were also interconnected with one another. So, borrowing and lending protocols, referencing a Chainlink Oracle, and other DeFi protocols, plugged into each other. So that composability was very important. And that user experience was very important for actually being able to interact on chain. But again, we saw that, it didn't really scale. The Ethereum fees started to spike a lot. So why do I mention this? I say this because Solana, as it grows and scales to millions of users or tens of thousands of transactions per second, preserves that composability, and Ethereum cannot. The way that Ethereum is scaled is it's reproduced that that environment in each layer 2. But if users want to move their assets between layer 2s or from layer 2 to layer 1, it's a whole process, and it takes sometimes days. It costs a lot of money. There's risk involved. There's bridging. There's a ton of friction. So our design, I think, was heavily validated and inspired by the idea that we wanted to see what could happen if the dynamics of DeFi scaled to 100 million people. We think it's going to be important. We think we're just starting to see it on Solana. DeFi protocols are composable with decentralized physical infrastructure network protocols. NFT protocols are all composable with one another. Users are using self-custody by the hundreds of thousands or millions and interacting with all of these things. I think for a normal user that's new to crypto, the stark difference that you'll see is, with Ethereum, you have to educate yourself on what version of wrapped Ethereum asset are you using. Is it the one for the Optimism L2 or the Polygon L2 or the Scroll L2? Is this a secure environment for your assets to stay long-term, or do you prefer that they settle down to layer 1? What assets do you keep on layer 1 and what assets do you keep on layer 2? On Solana, it just, I think it resembles something more like the Apple ecosystem, where you just don't have to think about it. It's Solana. You have a Solana wallet, you have a Solana network. Everything you ever do is going to be, on that one place. Every Solana product you use can talk to each other. We think that's a lot more conducive to mainstream adoption. And I think we've already seen also that builders feel more confident about the long-term usability of the network. And so they're more confident about iterating more deeply on the user experience on a network like Solana versus having to worry about how the backend might change if they build on something like Ethereum. And all of this is, built on what I mentioned earlier, the fact that we have parallelized transaction processing that's enabled by the idea of proof of history, a clock that can coordinate all of that messaging across the network.
Thanks. For our audience who's not spending every day in crypto or Web3, how will a protocol like Solana make our life easier? Do you have like a few examples you could go into, just making it more tangible for the, let's say, daily average user?
Yeah. So I think the end user experience that also connects with, I think, the big vision of Solana is that any marketplace that can be disintermediated with a protocol should result in much lower fees, much lower transaction costs for the end user. So a couple of examples. One is there's a company called Helium built on top of Solana that has a network of millions of nodes run by users. The accounting and the incentives for that network are all executed on the Solana network, and that network is basically turning spare home internet bandwidth into a global mesh 5G network. And so why is this important? Because if you get a 5G plan from a carrier, you're paying for them capitalizing their their infrastructure costs, their operations costs. They run their own towers, they maintain them. On Helium, it's all run by individuals who really just bought a $100 box and plugged it in, and they're just earning money by filling in gaps on the map. And so the ultimate cost of that network is way, way lower. So Helium has an unlimited data 5G network that anybody can sign up for, and it's $5 a month, US dollars. I hope to see hundreds more examples of physical infrastructure networks, and that's just one vertical of what Solana enables, that can be recreated in a crowdsourced way, have no middlemen, right? It's all a protocol that's operating the whole network, so you don't have any overhead from paperwork or settlement between companies. It's all automated. And the end user looks at something and say, wow, this is efficient, it's fast, it competes with the old centralized giants, and it's way cheaper for me, because I'm only paying for the cost of what it takes to run the protocol. A similar example that's just coming up now is Teleport. So I think one of the first 12 engineers at Dropbox just started an Uber competitor that's built on a decentralized ride-sharing protocol built on Solana. And if he was inspired to do this because he got into an Uber in Berlin and told the driver he was paying $65, and the driver said, "Oh, well, I'm making $25 off of this ride." So the realization there is Uber is not actually a marketplace business the way it purports to be. It's actually they're reselling labor, and they're trying to bring the cost of the labor down as much as possible, and they're trying to get as much revenue out of the demand side as possible. So they're a very rent extractive marketplace, if you could call them a marketplace. But really, ride sharing is a very mature product category. It should be a marketplace, and the fees of that marketplace should be compressed as much as possible. And that's what Solana enables by, allowing protocols like Teleport's Trip protocol to be built on top of it. So they're right now doing a kind of a blitz scale of launching city after city with a protocol that ultimately makes drivers more money and gets riders where they want to go for cheaper.
Could you maybe make a comparison to financial systems today in Web2 and how to make clear how powerful Solana actually is if you compare it to financial networks like MasterCard or Visa, just so that also the audience can understand what basis in terms of infrastructure Solana has built to enable financial transactions and other.
Yeah, I mean, same thing happens in finance, right? So I heard someone earlier talking about the trade execution and settlement between many banks that takes a stock purchase to happen, or merchant and bank settlement for somebody like Visa. Visa is now building a settlement product on top of Solana. Normally for settlement from a credit card to for purchase of an apple at a convenience store to actually route from your bank to the bank of the store. It might take an entire weekend. It might take a week. There's fraud protection involved, and holidays impact these things. I think what Visa started with was piloting on Ethereum to remove the human element and the overhead of interbank settlement. But Ethereum's transaction costs were actually still the same or higher than a wire transfer. So the end rails that were used for that settlement were actually more expensive. When they switched to Solana, they can do a million settlement transactions for $25. So effectively, for a company like Visa, they could have every issuer and bank, every merchant, every user transaction settle instantaneously for effectively nothing. Where before Solana existed, there would be all of these people waiting indeterminate amounts of time, days, weeks, and every single settlement would cost either at least the cost of a wire transfer. So it's just much more fluid, much more frequent, much more real time.
And the revolution of what Ethereum brought with the first smart contract platform, what you said before, and Solana kind of building the infrastructure to really scale this up, what Ethereum didn't manage to do. Why do we need smart contracts? The talk is about the Web3 stack, how our future will be built. What is how will smart contracts make our life easier? Why do we need smart contracts? Was that such an important revolution in that infrastructure layer?
Yeah, I think it's a lot of people think about it different ways. The way I think about it is that smart contracts and decentralized networks give us a substrate to replace trust. So, we trust banks to maintain our ledgers. We trust exchanges to maintain reserves and keep accurate account of trades. We trust Uber to keep a fair marketplace. We trust Facebook to keep us connected and not use our data in malicious ways. But all of these things are marketplaces. All of these things are effectively permissioned databases. Facebook has the only right access to its database, and they charge advertisers for read access, and they give write access for free to users, but it's a censored version of write access. If you break their rules, they can arbitrarily keep you from writing to that database. JP Morgan, any other bank, their ledger is a database that they have read and write access to, and their entire trade is not messing that up. I think the idea of smart contracts is how much of these trusted institutions and products can we replace with protocols, the way that we all trust that if I send an email to you with information that conforms to a protocol, it has your email address, it has a certain structure, it has a subject line and a body, that it will certainly get to you because, and it'll get to you not just once reliably, but if I send 1 billion or 10 billion, they'll all get to you. That's how reliable protocols can be. Decentralized protocols and the smart contracts that run on them have the promise of, running forever and being, incorruptible. And so, it's a big grand idea. And I think to some, it's sort of obvious why it would be valuable and important. But I think the hard work is not talking about it in theory. The hard work is finding immediate business models that create the value for the end users that take advantage of this power and are not arbitrarily just building on blockchain for for the sake of it, or for hype. And that's actually been quite a big challenge, and it's one that we're very focused on.
I mean, in VC term, we could say you have found product market fit now. How many users, if one can say that metric, does Solana have in total?
Yeah. So today we have between 250 and 350,000 daily users. At the peak of 2021 to 2022, we were seeing users in the millions. But we don't have a unique identifier for a unique human. So if you have multiple wallets, those all show as active wallet addresses for us. So I can't say specifically in terms of unique users, but generally we fluctuated between hundreds of thousands and millions of active addresses. Yeah, and I would say product market fit is well, I would consider us to have product market fit with developers for sure. If you're a developer and looking to build a smart contract or a decentralized app, we have product market fit with capturing those devs, getting them off the ground, getting them funded, and making repeatable use of the network. But I think the level of product market fit we're looking for is that there's a continuous flow of actual valuable products that themselves find product market fit that's sustainable for 10 years plus, and that can compete with one another, and they all uniquely benefit from Solana. So I think we're still the next few years still have a lot of work to do on that front.
I remember now going back when we first met and kind of discussed about the idea and vision of Solana. I remember you had no product market fit, and it was also not a focus at that point in time. Now, there will be a lot of founders listening. There are founders in this room listening. How did you kind of develop your go-to-market strategy, and when did you first realize that you hit product market fit?
Good question. I think the short answer is we were open to any use case from any customer for any reason, as long as what they were looking for actually needed Solana's performance. There were many, potential customers that didn't actually need a blockchain. They could have just built on a permission database. They could have built an API that was, publicly available. It wasn't a critical component of their product to be built on a blockchain. And then there were many potential users that could have really just built on Ethereum or could have built on a layer 2. But we went to conferences. We built a network, including you guys and other investors that we had, of people who really understood what it was we were trying to build, and that were themselves networked into many different industries. Because I think at the time it was clear blockchain would be useful for finance, but no traditional finance players were interested in seriously building anything on a permissionless network back in 2018. And then there were all sorts of other use cases, like telcos doing roaming settlement, and payments and all these other things. So our focus was, really finding one or two initial users that needed Solana's performance, and then just diving in with them and building alongside them if they could move quickly. Because we wanted to learn quickly whether Solana's performance actually benefited them, and we wanted to see how the network would be stress tested with live production use cases. So actually, Kin was the first product that decided to migrate from a fork of Stellar to Solana. They had around 50 applications built in their ecosystem. At their peak, they had around 5 million users. And, that was one of the first. The other was Serum, and that came from FTX and some engineers that Sam Bankman-Fried had brought in. And they moved very fast. They actually built very very good products on Solana. And then I think from there, what we started to discover was that, our analogy was to sort of concrete and bricks. When concrete was first introduced as a material, a lot of builders were asking, is concrete going to make a better brick? Because I make houses out of bricks. But there were very few architects that really were willing to take the swing to make, skyscrapers out of concrete, because it was the perfect, material for it. And so we started looking for really superstar developers that had strong product visions, and supported them, and then supported the community around them. So, Bartosz, who's now building Cube, which is, a next generation exchange. Armani that built Backpack, that is like a decentralized app store, also going to become an exchange. And it's an NFT product and a wallet. The Kin team now has pivoted to building Code, which is a payments app. There's more than I can name now, but at a certain point, we realized that really what we are is something more like Y Combinator. We need really strong visionary founding teams that are, small, fast moving, and very risk tolerant. And we need a community of them that support each other, build in interconnected ways with their products. But that are really ambitious pioneers for how block space can be used. And that's what we wanted to be. I think that's where we wanted to get to eventually, because then you're a platform of, the best engineers and product builders in the world, versus having, your fate as a network tied to one big customer. Like at some point we talked to a huge telco and did a whole pilot for them. And it was exciting because they needed our product, but it was a little scary because we didn't want to be seen as the telco chain. We knew that Solana actually has a lot more potential than just being a specialized single use ledger. So yeah, there's a million stories I could tell about how we eventually became such a strong organic community, but that was kind of the big beats of where it started.
Yeah, I think the scalability and the speed was something around 100,000 transactions per second you were able to make. So of course it was a niche at that time for use cases who actually needed that performance. But what I remember that also, and this was kind of made and depicted wrongly by media, I believe. And what were the challenges you were facing? Because I think Solana also in the media was kind of, okay, they were hit, they were down. What is the true story? And how did you solve for these challenges?
Yeah, I think the biggest challenges that we saw in 2021 and 2022 was that prior to 2021, we had no NFTs. There was no concept of NFTs on Solana. The standard didn't even exist. Everything was all a DeFi ecosystem that was growing and evolving and building, and hundreds of teams were forming in hackathons and organically outside of hackathons. And then when the NFT boom started to happen in 2021, our people were just knocking down our doors saying, why doesn't Solana have NFTs? That, they're so expensive. We're bottlenecked on Ethereum. How can we launch our NFT product on Solana? And ultimately, we decided we didn't want to build a KYC permissioned walled garden marketplace. We didn't want to cater to one or two celebrities that wanted to launch their NFTs. We wanted to make like the Shopify of NFTs, make it possible for anybody to launch their own store, their own platform, their own auction. and that was what Metaplex was. And it succeeded so wildly beyond our imaginations. Hundreds of thousands of projects launched. It became the first way that, over 250,000 concurrent users on Solana onboarded within the same hour. And that growth and the specific way that growth stress tested the network, because we would see instances of an auction for an NFT, and it would be one asset, one piece of state in the network that you have millions of incoming transactions trying to access. That's a very specific, very concentrated hotspot of activity. That was the first way that Solana had its first outages. So outages were a big challenge, but I think the bigger challenge that we had was that we didn't really have a robust comms team. We had a comms team that was very technical. It was one or two people, including me. It was very focused on the community, on the ecosystem of developers, and on communicating what was happening with the network. But it was not good at intercepting and shaping the narrative on Bloomberg and CNBC and across crypto press, especially in an environment where we were succeeding in a pretty precipitous way, and a lot of people were asking, "What's the catch?" And how do we? What's Solana's Achilles heel? So there is quite an adversarial environment. We're past that point now. I think in the past year and a half, we did the work. We built up marketing. We built up comms, and we've had way more coverage of the stories of what is being built on Solana. At the same time, when those first outages happened, we started the work of 3 major upgrades, local fee markets, so that there is an economic incentive for those hotspot moments to be throttled, and a switch to UDP for flow control. It's a communications protocol, and then stake weighted quality of service. So those 3 upgrades are all rolled out, and we haven't had an outage in almost a year. But that was definitely the most challenging thing that I think Solana went through. It's certainly the most visible one. My belief is every platform, every rocket ship company has some blind spot that becomes its Achilles heel, and and the ability to just dispassionately work to shore up that weakness is the first great test. And I think we passed it. I think we probably could have passed it in half the time, but I don't have any regrets because I think we're well past that point. I think the second one obviously is FTX collapsing a year ago, and a lot of people who weren't paying attention perceived that FTX was a much more instrumental character in the Solana ecosystem than it actually was. And I think what we've seen in the last year is, it's very obvious and clear that that FTX was only one small part of the early life of Solana after mainnet launch. And its collapse really didn't affect much. Everything was solvable in the past year, and it has been solved.
Yeah, thanks for that. And I mean, why would a financial institution, for example, choose building on Solana than on, let's say, Corda? I remember having this discussion here with I think it was a few years ago with Deutsche Börse when they started building their tokenization platform. That Corda would be the choice, and with other financial institutions where they think, okay, privacy networks are the dominant way to go, but why would actually a public blockchain like Solana be the right choice for a financial institution to work on or to work with?
I think what we found in the last couple market cycles is that institutions were choosing permission networks mainly so that they had control, and that sometimes they were choosing permission versions of networks they would expect to migrate to, just so that they could have control over that transition. But what we're starting to see is that so many of those pilots end up being, completely wasted. And again, think back to the Visa pilot, right? They went through the entire process of onboarding banks and issuers and merchants for settlement on Ethereum. And then they got to the point where settlement was happening, and there was very little demand for it because it's no cheaper than wire transfers. If the performance and the latency and the scalability of the network at some point is going to be an issue, anybody that's actually serious about what they're building starts to think 3-5 years out. And the biggest question for them is, do I have a predictable path to scaling if this becomes, millions of transactions per day, if this becomes something that I need, hundreds of thousands or millions of my customers or users to be able to access reliably, if we want to keep building and compounding what we build on the network. And I think in that regard, Solana is, if you talk to the engineering teams at these companies, it's always their favorite. What we've had to do the work of is socializing to the non-technical decision makers why Solana isn't risky. Because I think, we have the press about outages that they might look back to. I don't really see that as an objection these days. But there is, this question of Solana not being specialized for institutions. We don't have a giant integrations team. We're not, putting out institutional focused products. What we can do, and what we do tend to do, is if we meet with a technical decision maker and a non-technical decision maker, we can show them very quickly what already exists on the network to piece together. Because it turns out that the few customers we've really done custom work for, and some of them I can't name, but Visa is an example, Circle with USDC is an example, Jump Trading is an example. Their requirements have actually been the extreme end of what you would look for in terms of permissioning and privacy, confidentiality, KYC, the ability to control issuance and burning. All of these things that sort of pass a legal department's review have actually been built, and so we're still kind of operating like a startup. What we want to see is one or two of these institutions that have a burning need for our performance, and then hold them up as a lighthouse use case for others to find social proof in. And Visa is a really great example for that. Now, the answer actually to your question, if it's a payments company, is it's because Visa uses it. That's all we have to say now, right? we don't have to go through the complicated, explanation of the tech. It's just we have a customer that is, that is insanely good social proof, and I think what we expect to do is have customers like that in every vertical over the next few years.
Can you make it tangible? So why did Visa really choose Solana? How much cheaper or faster would Solana be towards the actual traditional system they're using today?
Yeah, the traditional system they were using is ACH wire transfers. So, I don't even know. I think those are between $5 and $20 for a transaction. Ethereum at its lowest, I think would be cents, but at its highest would be dozens of dollars. So the variability of pricing on Ethereum made it not viable as a layer one. Layer twos were not viable for them because they're actually very centralized. So, every layer two that exists on Ethereum today does not have fraud proofs. They boil down to multi-sigs where a few people could censor transactions or halt the network. And so, as far as performant layer ones go, I'm sure Visa looked at other networks. Some of them are very new in the past couple of years that are heavily inspired by Solana's design and basically copied all of Solana's, go-to-market playbook. But they're very new. They're very unproven. They haven't gone through a couple market cycles with, huge bursts of activity, many developers, many use cases, the way that Solana has. So I think, it was with a company like Visa, it's dozens of engineers, really deep, engineering leadership that gets to a decision like that. It was months of diligence. And yeah, I think it boiled down to performance on the live network and what we refer to as Lindy effect, the fact that Solana has been around now for three or 4 years, and the things it's gone through, the ways that it's been battle tested, make it more likely that it's going to be robust for the next 3 or 4 years. So Lindy effect is sort of, the longer it's been around, the longer it's likely to be around. And this was another thing that, again, I can't take that much credit. I think Anatoly was very confident about how important Lindy effect would be for these systems, that we needed to launch as early as possible and prove the performance and start that timeline before anyone else did. And we did that, and I think that factors in.
Just in between, because I'm looking at the audience, do you have any questions you would like to ask, maybe in between? And Raj, just checking with you, we are a little at the time limit already. Do you still have a few minutes?
Yeah, I have a couple minutes.
Perfect. Could you maybe pass around, Raj, just the question? There.
Thanks. Hey.
Maybe state who you are and what from what institution, sure, because you can't see you.
Yeah. Hey, my name is Hendrik from Bankhaus Metzler, a small private bank here in Germany. I actually have a question regarding Firedancer. You mentioned jump trading already, and the validator set that they are building out. And can you give us some kind of examples regarding financial services, exchanges, how market making, how high frequency trading, this speed of light validator set is going to change the game or bring it to an even another level when it's coming out?
I think there's probably better people that could answer the question. Anatoly being one of them. What I can tell you is, so for those who don't know, jump trading, one of the best and largest high frequency trading shops out there. Also one of the most crypto forward companies in their field. And their engineering team, we think, and we kind of did a review to form an opinion on this, we think they're probably the best in the world at building high performant decentralized systems. We like to, we think highly of the engineers that we brought together, but Kevin Bowers and the team they have there are, absolutely phenomenal. And so for anyone who's not familiar, what Firedancer is another validator client. So the same client that people run to operate the Solana network. A separate one is being built by Jump Trading that focuses on looking at the first one and saying, what are all the efficiency gains we could create with effectively the same hardware? And what we're seeing after about a year and a half of work from that team and them deploying on testnet is that it's capable of close to 1 million transactions per second. The latency comes down, significantly. As far as what new use cases we expect to see first, it's hard to tell. I think we're, just like when we launched the network, our eyes and ears were always open. We have not started doing significant, business development and demand discovery to line up what comes after, because I think we're not really in the business of, promising what comes ahead before it exists. What we want to see is what's in production, what exists, how performant is it, and then start working with engineering teams to make use of that performance. I can say that the performance of Solana today already is good enough for things like Visa. I suspect that Jump has some ideas for how to use that performance, but I think our focus is just on getting it out and actually, producing that performance first.
Is there another question in the room? Otherwise, maybe also you can state your name and the company.
Yes, hi Raj, it's Bartosz. You mentioned Bartosz before. It's another one, I suppose.
You're only the second Bartosz I've met.
Well, there you go.
So, good to meet you.
Anyway, great meeting you. So, it's just a question. So, if essentially the point, as I understand it, of Solana is the network, right, and everything you can build on top of it, etc., then the volatility of the coin, right, is a problem. I would argue, right? You would rather have a stable coin as a transaction tool, because you mentioned the Uber competitor, right? So if I book a ride, I don't want to end up paying double or half at the end of it, right? Depending on what the Solana coin is doing. So how is that stable, that stability going to be achieved? I presume by simply users taking it up and it becoming such a, let's say, high frequency currency that it levels out. And ultimately the question is at what level do you think it will level out?
Yeah. Good question. I mean, I think we focused very early on making sure that we had every major stablecoin onboarded to Solana in a native way. So USDC issuance and burning and bridging all happen natively on Solana. It was one of the first non-Ethereum layer ones for that to happen, and it's the most performant one today. Same with Tether's USDT. If a stable peg to a fiat currency is critical for the end users, I think what we expect to see is that the product implementing that payment flow will use a stable coin. They won't use Solana. If the product and the company that's built the product is passing through the transaction cost itself to users, and that's quoted in Sol, then they may be exposing some price risk to the users. But the company that's built the product can create dynamic pricing and fees that accounts for this Solana transaction cost. They can eat those costs. They can subsidize them. I think because the cost of Solana is literally 100 times less than every other network, including layer 2s. And I mean, I don't want to comment on Solana price, but I don't think I would be surprised if it 100x's anytime soon. This is just it's just like really not a problem or a question at this point. That volatility doesn't produce any friction in any system that we've seen yet so far. And that goes down to products where there is no intermediary that's built a product on top of the network that can modulate and abstract away those fees, including things like NFTs. We've seen millions of users trading NFTs, directly interacting on chain with contracts. We've seen the SOL price, fluctuate immensely, and we've never seen any friction that results from that price fluctuation. I think there's enough design space for a product developer to make sure that price volatility risk doesn't flow through to users in a way that's prohibitive.
Yeah, thanks so much. Maybe as a last question. And the price discussion, and of course, this is you started to build in a bear market. Now again, we are hopefully kind of getting out of that, but it's a more price-driven discussion. What I'm more interested in is to know from you, from a technological point of view, and what Web3 kind of offers. What are you most excited about when thinking about the future of Web3?
Personally, I think there's a lot of exciting things around, real world assets coming on chain, more institutions adopting and using these rails, payments networks using these rails. But I also personally think that there are breakthrough consumer applications of users learning how to use a blockchain that that will resemble something like what we saw in AI and and the breakthrough use case of ChatGPT. And so I'm very focused on making sure that happens, whether that comes from a startup product team within the ecosystem, or whether that's something that Solana Labs has to build toward. I think the best beliefs are controversial. There's a lot of non-controversial beliefs you can have about how blockchain is going to be useful, but our controversial belief is that all end users will learn how to sign transactions on blockchains and understand what that means for themselves, understand what that means for the assets that they're interacting with, understand what network they're on, and understand that it is powerful, that they have uncensorable control over assets. It is a huge mind shift, but I think we've seen bigger mind shifts with users learning how to use internet protocols like email, and HTTP, with using QWERTY keyboards, with using multi-touch gestures on capacitive touch screens. Humans have learned how to interact with computers in very complex ways when it's valuable to them. And I think what we expect to see is that there will be consumer grade applications that produce such value that users by the tens or hundreds of millions will actually convert and learn how to do that transaction signing. And from there, what we expect is, just like it was very powerful once the first 100 million people learned how to swipe on capacitive touchscreens, the network effects of 100 million or a billion users knowing how to sign transactions is going to be very powerful. It's hard to even explain what happens then, but we're very excited for it.
Well, thank you so much for being with us. Thank you so much for your time. Solana has been part of our history and will also be part of our future. So we continue to follow the ecosystem closely, continue to invest in it, be it with this fund and or our next funds. So thanks for being here with us, and hope to connect soon. I'll definitely give you a call once I'm back in San Francisco.
Great seeing you, Dominic. Thanks everyone for having me and for listening.
Thanks so much. Perfect. So we went a little over time with this one, but it's definitely it's of course always difficult to convey the story of a founder, the story of a personality if it's hybrid. Of course, we would have loved to have him here with us today. Maybe next time I'll gather another group of people once he travels for Europe again. But this was a perfect end because it started with us and we will continue investing in the space. Web3, I hope we conveyed this to you today, has a lot of potential. We can't even imagine where this will take us. If I want one thing you take along with this, is that blockchain is not only crypto is not only blockchain, and blockchain is not only Web3, right? Web3 is really the future iteration of our internet. It's where we have to evolve towards. And this will only happen in a combination of different technologies. We call that technology convergence, what I mentioned right in the beginning. And it will be a combination of these technologies: blockchain, crypto, digital assets, and even more. It will be AI, it will be IoT, it will be other layers which are important, such as security and compliance, and other influences which will come in, such as regulation as well. So if you have any questions, you now met part of the team, you know where we are. Always try to connect us with founders you might see in your ecosystem. We're happy to take a look if you come across Web3 startups and help you to understand that vision or understand that investment opportunity. And now I may thank you, all of you, for spending this time with us. I hope it was valuable for you. It definitely was valuable for us to have you here, to see you, to have a personal conversation. I hope you had the chance to get to know more people. And as a last point, thanks so much to our team, to everyone who is here. It wouldn't have been possible without you, with every single one of you. So a round of applause for the entire Blockball team. Thank you. And yeah, now practical things. I don't know if everyone reacted to the dinner or still didn't react and still wants to join. So we will have a very chilled out dinner at Club Social Mexicano. It's not the typical food you get in Frankfurt, but still it's very good. We will have some margaritas, maybe I'd light some tequila. Who knows what will happen, but definitely we will have some tacos and some good food, some good music. So if you're still around, more than happy to join us. It will start at 7:30, but actually probably some will probably move there a little earlier. But definitely 7:30 at Club Social Mexicano, which is, if you want to walk, just straight always. It's around 10 to 15 minutes walk from here. But I guess go home, go to the hotel, freshen up and come back, and we'll meet you there later. Thanks a lot.